Hello everyone, this is Abhijit Misra and welcome to this new video. In this video, I'll be discussing about the income statement or profit and loss statement. The main purpose of this video is basically to understand the profit and loss statement. So whenever we're using any website like Skinner.com or any other similar website, in such a case, this video is basically help you to understand the profit and loss statement in a better manner. Just one disclaimer. This video is not for any professional courses like CS, CMA because I'm not going to in depth, I'm not going to take through or I'm not going to explain like everything in depth. So basically a basic understanding I'm going to give about the profit and loss statement. So let's start this video. In the profit and loss statement, the first part basically whatever we see is basically the income part or the revenue part. So here basically for the explanation purpose or like for the understanding purpose, I have taken the financial statement of Reliance Industries for the financial year 1920. If you see here, I have taken the financial year 1920. And if you can see here, there is a comparison also I have taken like from 1819. So the statement of profit and loss is here and for the year ended 31st March 2020. And here you can see there is a income statement. In the income statement, what is coming? First, the value of sales. Second is the value of or income from services. The value of sales and services, that is basically the total of value of sales plus value of services. And then after less the GST, whatever is there they have recovered. And then after it is coming as revenue from operations and other income, the total income. Let's understand line by line. The first thing is basically income. So in this statement or in this particular area, what we are understanding, how much income Reliance has earned during the financial year 1920. Correct. This is the first thing. So the first point or the first source of income is basically value of sales. What is the value of sales? Take the example, you have a grocery shop and you are selling the groceries every day. So that is basically called as the value of sales. That means as Reliance is a big company, so they are selling all the groceries, they are into all the retail business, they are into like Geo, they are into like what I can say into the oil manufacturing and also all the crude oil processing or refining industry. So in that basically the value of sales whatever is happened, so that basically they are showing. If you see here, the value of sales is basically 362,869 crores. Okay, so let's understand what are the different components that are coming under the value of sales. If you come here, so here you can see the value of sales basically they have explained in the note number 25. You can see revenue from operation they have explained in the note number 25. Let's come to the note number 25. Here you can say I have taken the screenshot of the note number 25. So here basically I am explaining the revenue from operations. So what are the areas they are like earning? So first of all the thing is basically refining business. From the refining business they are earning around like 2, 3, 4, 6, 8, 7 crores. And same manner that there is a petrochemical like component. So from there also they are earning around 1,12,726 crores, oil and gas and others. Same manner if you see the value of sales is basically total coming 349,028. So if you come here and same manner income from the financial services, income from other services and also value of services is coming around 1,852 and total is coming 350,880. So what basically I am trying to explain, that the value of sales is basically whatever the sales they are doing, and the value of services is basically whatever the services they are providing. From there how much revenue they are earning. So that is basically explaining. So remember one thing, value of sales is basically all the sales. Take the example, I am a manufacturer, I am manufacturing certain goods and I am selling in the market. So that will basically come in the value of sales. If I am a trader, take the example, I have a garment store, I am just purchasing the like garments from the third party and I am just selling. So that also will come as a value of sales. Same manner value of services, take the example, I am a professional, I am giving some services in the financial world. So that is basically called as the value of services. So in the income statement there are basically two components, value of sales and value of services. Let's come to the third part. If you see here, there is a third part called other income. So if you see in other income is basically explained in the note number 25. Let's understand what is the meaning of other income and what in case of Reliance, what are the components it includes in the other income. So if you see here in the note number 26, other income is basically consisting of interest from bank deposit. So that is basically 127 crores. Interest from the debt instrument. Basically Reliance has invested some amount of money in the debt instrument. So from that debt instrument, so they have earned a interest of around 10,502 crores. Same manner other financial asset and also others. So in a common understanding point of view, so just understand if I in the other income what are the components it is coming. So in other income, basically all the interest whatever they have invested in the fixed deposit, interest from the debt instrument, and dividend whatever they have invested. Take the example, Reliance has invested in the share of Airtel, so dividend whatever is earning, that is also coming. And also some of the unrealized profits means, take the example, I have invested in the Airtel at 100 rupees, and right now I have not sold that like share, but still the share is trading at around like 120. That means there is an unrealized profit of 20 rupees, that also we are recognizing. So now you understand the component, like income component. So income component is basically consisting of three things. One is income from sales, income from services, and the last thing is other income. So income from sales is like sale of like goods, whatever you have manufactured or you are trading. And second thing is sale of services. Third thing is other income. Other income basically consisting of interest, dividend, and also trading. Trading in the sense they trading the share. So all these things. So that is basically the understanding. So now we understand the revenue part or the income part. So let's come to the expenses part. So if you come here in the expenses part, the first line item is coming as cost of material consumed. Again I'm repeating, cost of material consumed. So what is the meaning of that one? So take the example, I have a hotel. So I have a hotel, like I am cooking like rice and dal. So to like prepare rice dal for 100 people, so what basically is happening, I have to purchase some rice from the market, and I have to purchase the dal, ghee, and many other like things. So that is basically cost at the cost of material consumed. That means to manufacture rice or to manufacture like rice, whatever you have to use, basically you have to purchase the rice from the outside, you have to put the water, then after you have to boil the water. So what are the expenses you are incurring? Purchase cost of the rice, water cost, and third is basically the gas, whatever you are using. So that is basically the total expenditure whatever is incurring, that is basically called as the cost of like manufacturing in normal scenario. So this is basically the cost of metal consumed. So basically whatever they are, like take the example, they are into they're manufacturing the crude oil, or they're like producing all the petrol and diesel. To produce the petrol and diesel, whatever the expenses they have incurred, like they have purchased the crude oil, then after they have made some expenses like in the processing. So that is basically called as the cost of metal consumed. And the second thing is basically purchase of stock in trade. So what is the meaning of purchase of stock in trade? So take the example, Reliance has purchased some crude oil from Africa, that is in the transit. Normally it will take, I don't know, normally it will take 1 to 2 months from Africa to like India. So during that, what is happening, actually the crude oils are actually in the sea. So that is basically called as purchase stock in transit. And the third thing is basically change in the inventory of finished goods, work in progress, and stock in trade. What is the meaning of that one? So take the example, I'm just I have a trading business, and I have a grocery shop. So at the beginning of the month I have 100 kgs of rice, and at the end of the month I have 80 kgs of rice. That means 20 kgs I have sold already. So that means that should come in the profit and loss. Here basically all these things, like take the example, change in the inventory of the finished goods, work in progress, stock in trade. So all those components will come. What is basically, so change in the like value of inventory, change in the value of stock in transit, or stock in trade, finished goods, work in progress, that is basically coming here. So that is basically, you can say, the three components what we are seeing: the cost of metal consumed, purchase of stock in trade, and also change in inventory of the finished goods, work in progress, and stock in trade. So these three components basically giving you the manufacturing cost, or the actually cost. Like basically if there is a sale of 100 rupees, this cost is basically coming as 50 rupees. That means a gross margin I'm getting around 50 rupees. So that is basically a common understanding. So excise duties, what is the meaning of excise duty? Basically to manufacture the goods, the Reliance has to pay certain amount of money to the government. So that is basically coming as an excise duty. Remember one thing, this credit he cannot take under the GST regime. So due to that, this is coming. And the next item is coming as employee benefit expenses, that is coming in the note number 28. Let's come to the note number 28. So here you can see the employee benefit expenses. There are three components. One is the salary and wages, contribution to the provident fund, and staff welfare expenses. So remember, what are the employee benefit expenses, like cost normally will come. So basically salary, whatever you are giving to your employee, that will come. Same manner, what are the provident fund contribution you are making, that will also come. Third is basically whatever the staff welfare expenses. Take the example, you are taking your employees to a trip, or you are giving free food, free tea. So that is basically called as the staff welfare expenses. That is also coming in the employee benefit expenses. So the next line item is coming as the financial cost or finance cost. Finance cost is basically, take the example, you have taken some loan from any third party or bank. So in such a case, you have to pay the interest. So that is basically called as the finance cost. If you see here, the finance cost is basically consisting of two three components. One is the interest expenses, interest on the lease liability, and applicable losses in the foreign currency. So from the normal understanding point of view, understand ki what is the meaning of financial cost or finance cost. Finance cost is basically you have, whenever you are taking any loan, on that loan you have to pay the interest. So that is basically coming as a finance cost. Okay, so next let's come to the next area, that is basically depreciation amortization expenses. So what is the meaning of depreciation and amortization? Basically Reliance is having a huge factory, or you can say huge manufacturing setup in the Jamnagar, Gujarat. So as this is a fixed asset, so every year there is some depreciation has to happen. The same depreciation amount basically it is hitting to the profit and loss. Take the example, the value of the factory is around 1 lakh crores. So every month we are taking a hit of around 9728 crores to a profit and loss. That is basically what is happening. The value of the asset is decreasing. So that is basically called as depreciation. And other expenses. So other expenses are basically any expenses which is not coming in these areas. In this area means like either in the cost of material consumed or excise due to employee benefit expenses, finance costs, or depreciation, that will come as other expenses. So here if you see, in case of Reliance, in the other expenses they have like categorically they have divided to three category. One is your manufacturing expenses, and second is your selling and distribution expenses, and third is your established expenses. So you can see also there are different things that, take example, in manufacturing expenses there is a labor processing charges, repair of building, repair of machinery, many things. Same in the selling and distribution expenses, there is also warehousing and distribution expenses, sale tax, VAT, other selling distribution expenses. Same manner in the establishment expenses, professional fees, general expenses, rent, insurance, rate, taxes, etc, etc. So these are the like some of the areas. And then after, if you see, the total expenses is coming around 320,860 crores. And then after it is coming the profit before exceptional item. So remember one thing, exceptional item is the basically abnormal item. So you have to understand, if take the example in one of the company you are seeing a huge amount of exceptional item, then you should dig into that. You should understand why this exceptional item is coming. For the time being, you exclude that one. You understand ki right now your profit before tax is basically coming. All the expenses you got, basically all the income you got basically from the revenue from sale of goods, sale of services, other income, that is the total revenue you are getting. And here is the total expenses. You are getting the total income minus total expenses, that is basically profit before tax, that is 40,316 crore. Then after, what is happening, there is a tax expenses. So tax expenses, you can see there is a current tax and also deferred tax. So no need to understand what is deferred tax. For the time being, you understand what the meaning of deferred tax is also like a tax. Okay, so the tax we are going to pay in future, that is basically called the deferred tax. So the total tax expenses is also around like 789 or 9,413 crore. So based on that, profit for the year is basically coming as 30,903. So that is all about the profit and loss statement. So no like major thing. So remember one thing, like profit and loss statement is basically divided into two parts. One is the income from or revenue part, and another is expenses part. So revenue is basically revenue from sale of goods, sale of services, other income, three components. Expenses is basically cost of goods manufactured and employee cost, finance cost, and other expenses. Then after tax it is coming. So then after you're getting the profit for that particular period. So this is all about this video. So the main purpose is basically like why I have showed this video. So in future I'll be using the screener.com or screener.in. So there you may get a lot of confusion what is the meaning of that one or this one. So due to that, if you understand what is the meaning of these few things in the profit and loss, that will help you a lot. So thank you so much for watching. Have a good day. Bye bye. Please subscribe to my channel and just support me. Thank you so much. Bye.